Well, guys, okay, well, guys, we should be on live right now. Let me know if the sound is great and if you see me properly before we start together today. I think we should be good, but guys, hi everyone, first of all, and let me know if you hear me, as usual. It's fine, it's fine. Loud and clear, looking great. Okay. Good morning, everyone. Thank you. Good morning for the one that are actually from US. We are from Europe, so actually it's only afternoon. So that's fine. I don't know if you feel that today the market in US are closed, so you have very low volatility in gold and silver. You have you have some movement in Forex, but not like big movement. And of course, like the S&P, the futures is moving, but very low volatility as well. Market are closed. There is a holiday. Let me remind me what is the name of the holiday there. Should we call that Juneteenth? Okay, Juneteenth. Actually, it's Juneteenth in US, so there is no market trading in Wall Street. You see, it's quite difficult to trade when you have like low volatility. It depends what you're looking for, but generally I try to avoid trading I try to avoid trading during those holidays. But what is good is that during that time you can, take some breaths, remove from the market, take a step back and look what happened last week and what we can expect this week, and that's why each Monday we do. So today it felt on the holiday, so that's fine. So we're gonna take this day to make a review. What happened last week. We will try to understand if there is any key zone, maybe macro environment as well. If there is some news we had, I think it was Thursday or Wednesday, the hike in interest rate from the Fed. That moved a lot the market with a new law in the indices. So let's try to move on the chart. Down. Yeah, 1 minute. Playing a bit with the camera right now. Okay, that should be okay. Okay, so let's start and having a look to the US markets. I don't know if you already know, guys, but we released indices in our programs. Not in all the programs right now. It's only for instant funding. We hope very soon to open it for the Freestyle and also for the bootcamp. We are finishing some testing and to calculate the margin to be trading and to be available in the order program. So this is good to have indices, especially during that time when you have a lot of movement in the capital markets, movement from the dollar to the stock markets, moving to the commodities. So we are at the beginning when Gil actually built the company. He thought only for funding forex traders, and then we prefer to offer also any type of assets. But still, from what I see, we have still plenty of traders that trade only forex, and that's fine. But myself, when I look for indices and especially US markets, trading during that time may be very difficult, may be very interesting. So let's move on. Okay, actually on the weekly it doesn't look very great. We are approaching closely you see this top here is exactly the top of the COVID. So when COVID came from and we had some lockdown, the S&P started to go down, and I don't know if you remember, but the Fed all the time put money in the market. It's called quantitative easing, QE. Okay, and from here they start. I mean, maybe from here. I don't remind actually the timeline, but months after months they've been flooding the market in terms of liquidity, and that's what it's called quantitative easing. They put a lot of they print money. Okay, let's say that. But when we came at the top here, you see all this top and this structure. The market understand that there is, because of the QE mainly, different problems. We have inflation, we have debt, and a lot of other issues that came across. There is the war between Russia and Ukraine. So that's why actually the market goes down from the top here, and technically we are not so far from the top here. This especially would attract a lot of investors if the market goes down. I'm an optimistic guy. I know that there are some traders and some funds expect the S&P to get broke to 50%, let's say to 2,200. I'm more optimistic. I believe that after 2008, after the crisis we had, I don't think the central banks will let the market going down. It's actually very complex scenario because you have inflation and because you have debt, and you need to find the middle, the equilibrium between the two, and it makes actually the situation very, very difficult. But technically, you see, we already had a huge dip. It's from 4,700 to 3,700. $1,000 in the S&P is quite huge. It might be 30% from the top. If we can calculate that, 40,000. Yeah, it's more than 10%. Yeah, it's maybe between 20 and like 25% down, approximately from the top. So this is quite huge. And of course, it gives also some wonderful day trading opportunity. If we go to the lower time frame, maybe to the H4. Okay, so this actually breaks down. Yeah, this was a support that hold for let's say multiple weeks. We break down, we make a retest. This was actually, you see this huge bar. This was actually during the Fed talk. That they will hike interest rate, and then the market moved on directly. And we have here today another consolidation zone. This will be highly difficult to make any buy, as the market momentum is very bearish. But you see on the H1 you have a supply here. It's reacted already multiple times. I don't want to order the market today, but you know, having a stop loss above, for example, and let it the trade goes down even more, that may be interesting. Also here you can have a reaction as you have a demand as well on that zone. But yes, I would prefer to open any sell position. As you see, there is no other news. The market is very bearish. If you are already heard that actually the S&P and the indices entered in a bear market, so of course you don't want to be against the trend. The market already goes down. The market can have a huge movement in volatility in the downside even more. And that's why I would be only looking for sell position in the S&P and in the Dow Jones and in the Nasdaq and so on. And yeah, we see it clearly. Making a buy actually it's quite difficult. The main zone I see would be the big green zone here. That is actually the top zone of the COVID, and you see it even more clearly here. Okay. This is approximately here, and you have here also your fresh demand coordinate with the top. So yeah, here you have a lot of trade. Like as a long-term investor, if you want to hold 3,400 will be a great spot. Can you trade S&P on your account? Yes, you can trade S&P on your account. Only it will be only on instant funded programs. Actually, okay. For the bootcamp and for the freestyle, actually this is not available. We hope opening it very soon. What more? Let's maybe open some gold and commodities, because it's also quite interesting. I want to see, before we move to commodities, let's check the VIX. I don't know if you guys know about this. But yes, it's quite... you see this showing us the fear on the capital market, and it's kind of we are more than okay. We are actually 31. It's still still respecting the 36 levels. So you have some divergence. Okay, you have some divergence between the S&P and the VIX. Of course, if the market will move down even more than 20, 25 or more 30% from here, we will see a breakout above on the VIX. But as long as we are good here, we don't generally a good, let's say a nice environment without any fear would be around 20, between 15 and 20. When we are around 30, generally it brings some no, it's giving some pressure. Okay. Actually, the market is still respecting the zone, and this is quite interesting to have this divergence, because the S&P is quite falling, okay, but see, so you have the S&P falling, and the VIX is still holding the 30 zone. So that's why this is actually why I'm still optimistic in the market. The market can go even deep, even give a dip even below the 3,500 rate, 500 zone, and goes back to this. Yeah, this is interesting. And you have the VIX. Okay, so and this was during the COVID. You see, it's topped to 84, and then brings down. Actually, today we are not so far from the top level of the COVID, and still the 31 here is not crossing. Yeah, this is interesting. It's interesting. Okay, can you guys consider adding a dollar index, not even to trade it, just a live chart would be great. Okay, I keep the idea in mind. That would be interesting to provide dollar index chart in the 5ers feed. That's something I can bring. I think that may be a good possibility to give like this on a only read only mode or view only mode, and it would be great instead of jumping between trading view and your MT5 platform. Talking about the DXY, let's move to the chart to understand what's going on. And last week we made a new top to 105. As you know, investors, traders, funds are rushing to the dollar. This is not as a safe asset. People prefer cash instead of risky asset during those times. It can make like you see actually on the daily chart it looks like as a fat and head and shoulders if it's all. Okay, so you have your first head here, so let me show you that. Okay, so you have the head here, you have the first shoulder here, you have the second one just created last week here. It seems the dollar will have a new high during that week. The Fed might increase even more the interest rate. So we might have some very huge movement in the dollar also this week. We had huge movement last week already, but of course I believe that we can even push even more than that. Yeah, and if you go to the monthly chart, you see that we are actually breaking this 103 threshold here, and the next zone will be 106, and after you have like a big liquidity gap from 106 to the top will be 117. We have to look it even closer because we can have like some rejection again at that zone during that week. As a day trader, that's some spot I like to trade because the breakout is not so much confirmed. Okay, you have like some already some rejections that intraday traders want to react. You see also the pound dollar, you see the euro dollar giving some great pushing movement last week, and this is especially because the dollar index didn't move straight away on the upside. Okay, you see on the daily chart, you had a breakout here, and then from here we moved from 105.60 to 103.65. Okay, so this moves on the downside lead, to some pushing movement in the euro dollar, in the pound dollar. So this might be interesting. And also, what I like to see is that the dollar here in the short term is on overbuy. Okay, let's say overbuy. Why? If I go back to July 21, so let's say 1 year ago, I take like 1 year ago, and I make like an aggregation of the average. Okay, so I believe that we start from June 21 here. You see the market closely entered in a uptrend. Okay, creating an average. Okay, so this is the average along the time. It's like a moving average, like but technically we understand that when you add this uptrend channel, this creates this type of line, okay, where the market all the time should move back to this average, and actually we are way so far to that. If I put Bollinger Bands, it might do the same as well. Okay. If I go to 1 week, yeah, okay. Even on 1 week, you will see it better. Okay, so this is the Bollinger Bands. It gives you the volatility in a period of time, and here it's quite very, very clear. Okay, so you have a lot of line, but let me be clear more on that. Okay, so the average is around 100. Okay, around 100, and actually the price is moving to 100 for today. Okay, so we are in a support. The market can bring a dip around this average again. The 100 is a moving average, so it's all the time moving forward. And you know, having the daily chart. So this is what we had. And the average is on the middle. It's also going to be 100. Yeah, it is zone. It's especially this zone. So in the long term, the dollar will still gain in value, but in the short term, actually, we are in a overbuy situation. Okay, it's capital markets. You have movements up, movement down. If you have a bigger picture, of course, I see the dollar moving up to 107, 110. But in the short term, okay, let's say 1 week moving forward, 1 month maximum, I expect at least a returning to the mean. Okay, I expect the price return to the mean before having I don't know, a huge breakout on the long term. But actually, technically, what I can understand is that we are in an overbuy zone, and that I won't make any buy on the dollar in the short term. Okay, in the long term, I still believe that the dollar will goes up. If you told me today, if you want to hold a position for 1 day, what you prefer to do? In my opinion, I would prefer to sell the dollar in the short term. Okay, that's my point of view. And I think we could see that also on the euro dollar and the pound dollar and all those pairs. We're going to move to MT5 in the next few minutes to see if we have any opportunity on the market. Okay, I just want to connect to MT5 meanwhile. If you have some questions meanwhile regarding, we talked about indices, S&P, VIX and dollar index right now. If you have some questions on the chat, please guys let me know. I already see a chart on that want to have a look to gold, and that's what we're going to do right now. Okay, before I move to MT5. And gold. Okay, gold. So as I said today, you see very low volatility. It starts from here. You have very no movement, at least no movement because of the holidays. But what's interesting is that I'm still bullish in gold. I still believe that we're going to have a huge rush to commodities and especially metals. We already had some wheat, soybean, oil that pushed a lot, but we see that metals not so much, and there is here a divergence. When you have like the dollar that is moving up, you have the indices moving down. At some point, physical commodities like gold, I'm expecting in the long term, maybe we'll see if there is any opportunity in the short term, but in the long term, to go on the upside. That's fundamentally explanation. Technically, that's, I'm looking all the time at, you see, this type of, ascending channel that is holding. All the time we make a dip, there are some buyers that coming back. We had last week here a dip, and we had already some traders that bought back here the gold. And yeah, we have, you see, we have still this demand that holds. We can have a dip below. Let's check in the lower time frame if yeah, this is quite interesting. Okay. Actually, the goal is battling only at this zone. Okay, if you see on the daily chart, so the market goes down, make a dip, and again struggle to break this zone. If it's a double bottom here, okay, and we had some traders that already bought here, and that's a nice entry to hold, and we break this zone, we're gonna hit to the 2000 lows. Let's see on H1 if we can have any spot. You see, we had this breakout last week. We had a retest last week, also today. That's holding. You see on the M30. We breaked out, and this actually holding. We have this triangle. This is an ascending triangle. Yeah, this is an ascending triangle. I expect this to be breaking on the upside and reach again the 1800 to have a last breakout, a last test. I expect it to block actually that zone. But yes, we had some opportunity last week. I hope we can have more opportunities to make any buy. But yeah, here was a great buy, buying zone for last week. We had like a small, some spot today, but I prefer to be away of the market today as it's holidays. But we'll see tomorrow what's going on. And you see already the market here is giving a no. The market don't want to make a new high, but when we will break, you see this this channel here, this don't trend channel, we will go again to the 8870 and then make another retest. Yeah, so you have let's make a summary. You have like two big zones for the gold. We'll get rid of the line. Okay, you have two big zones. You have this first zone that is actually struggling a lot. So for traders that hold the long position, try to think about taking some partial profit at that zone if you hold a buy. You have the second extreme zone that it's still holding, and it's still also in a weekly demand below. Actually, you see that we are in the middle. Okay, in my part, I don't like to open when we are especially on the middle of two extreme zones. So this is actually where we are. So you have to look at lower time frame, and when you have lower time frame, you have this zone that is holding. That is actually a breakout, and we have a retest, and this triangle. So this is actually my analysis for the gold this week. You have this support that is in the middle of the two big extreme zones. That is, you see, opening a buy here would be less effective than opening a buy at the bottom, okay, because this is not an extreme zone. But yes, if you handle your risk properly and you put a stop loss very tight and the market goes in your way, you can at least take some partial profits at the top here. So that's what I believe. Okay, so this is for gold. Yeah. Let's move to the pound dollar. Yeah, pound dollar is a bit complicated because it's on a big bearish momentum, and the market is don't. Okay, so you have the monthly chart. Okay, when you have the monthly chart, you have this big zone here. When we expect like to have a huge dip like we had last week to attract some buyers, but when you're a day trader and you want to trade on a buy here, you will probably get in trouble. Your stop loss can be taken, and it's going to be very difficult. You see on the daily chart, we had a low here, we had a new low here. It's kind of very difficult to open a buy when you don't have any zone, and the zone in the weekly is quite huge. Okay, you have actually this big demand. You don't know where will be the low. So Pandora is good also for looking. Okay, I like to check Pandora for looking at what's dollar is doing and what's the pound that is actually very weak because of the Brexit, because of the rate, the hike in interest rate also in UK. So I like to see the pound dollar, but trading it on a daily time frame or 8-4 time frame would be highly difficult for me. Maybe you guys know how to trade pound dollar in the in a longer time frame, but especially in that zone here, this would be for me very difficult to make anything. Okay, for some people that make a buy, let's say at that zone. Okay, you see, maybe I think it was a few months, let's say 1 or 2 months ago. So they bought here, and then the market get down, let's say 200 pips below, probably getting a lot of stop loss at that point, and it might continue. Okay, in the euro dollar it's quite different. Okay, you have like some zone to respect. On the daily chart, you have at least this, this lowest point to have a reaction. You have some levels. Okay, you have like okay, you have that support that hold actually that week. You have also that support at breakout and make a retest exactly at that spot. You have also this zone that breakout and make a retest. So technically euro dollar is better for me. Okay, I don't know if you guys agree with me, but we see like the different structure in the euro dollar much more better than in the pound. You see, we had also like this here. In pound generally, when the market breaks down below, you have like a huge dip and you don't know where is the bottom. Okay, at least here you can manage and try to understand what the market is trying to tell you. And on the monthly chart, we are especially at the bottom. Okay, and that's actually why the market is holding last week. We are here. Okay. This is, you see, the price we have actually in the euro dollar happens in 2017, 2015. You don't have like this type of opportunity every month. Okay, it's like we wait from we had here a small dip, but not enough to attract some buyers. But when the price is 1.05, it attracts a lot of traders. And on the daily chart, we have this double bottom that start to create. Actually, we are in the middle, but quite interesting to see that we actually respect the point of last week. It was 1.04. We don't go below to 1. I think the lowest was 1.03, 1.03 700. Yeah, 1.03 500. Okay, we didn't touch 1.02. I don't think we can go to parity. There is a huge technical. We have here at a huge technical support, and the risk reward would be phenomenal. Buying here, making a stop loss below here, and we have like huge risk reward to have in the long term. Okay, you will have to wait a few years to reward on this type of trade. But on the daily chart, it can give you see, some nice waves like we had last week. Okay, so we had like 400 waves movement. Here we are like 150 pips, and we keep climbing. Okay, so you have this market structure. This is the first one on the H4. You have the second one here that you see we break out below, attract some stop loss, making a huge wave. Here is quite the same, it respect. Very easy to understand technically what's happening. And you see also here, this was also a market structure on H1, the smallest one. Okay, if you go to the H4, it's especially here. The market breaks out and make a retest around that zone and pushed up. Okay, so it's classic to trade if you know to manage your risk here, where to put the stop loss. It might be a playground when the market reach a monthly support like this one. You have a lot of things to do, and you see also stochastics here below 20 starting to cross, being flat. Okay, it's happened also here. I will repeat what I said, like already some trading room I did a few months ago, but here the market went down. Okay, and stochastics were below 20 starting to cross. At this point also, here we had how much time here? Here we had like from 2015 to 2017. We had 2 years that the market have been like struggling, and then we moved up. Stochastics crossed above 80. The market went down, and then also here the market starting to make some flat movement on stochastics, dip, and then the market goes up. Also here we had crossing stochastics above 80, and here the scenario is starting to make this again. Okay, so you have to put, and you have to understand what you believe. Is the euro will be weaker? We know that the dollar actually will be stronger, especially my view. But maybe the euro also can, at least equilibrate with the dollar, and we can see like a short up movement. So this is for the euro dollar. Okay, and I will move to the Australian dollar right now. Yeah, it's interesting. Okay, before I move to short-term time frame, let's check the daily chart. And the first thing we see is that the market reacted to that demand last week. We also had a retest. Okay, you see that the market react. It make a second dip and attract some buyers here. We may have a new test around here that would attract some buyers definitely. Let's move to M15. Okay, the market definitely react to this market structure here. But yeah, the trend is quite up. Again, this is not my cup of tea to make anything here when the market already moved on. We see stochastics cross above 80 here. Okay, when you have this type of cycle around 80, huge chance. There is a chance that we get back to the bottom here, or we can get back again to the extreme point around the bottom here. Okay, so try to find any buy setup as the market is quite holding here, and the dollar index didn't break you know, any actually didn't break any new high. So in the short term, try to find any good spot for making a buy. Yeah, for me the main spot would be actually on that zone, on the M15 if you look for short-term time frame. Okay, so this would be this zone, and of course check that you have any signals. You see actually stochastic is crossing. If the market goes back here and you have also any signal MACD or whatever you have, RSI, that is also giving you a signal to make a buy, try to react at that zone. Okay, it's also respecting this zone here. Okay. Yeah, dollar CAD. We okay. Dollar CAD. Dollar CAD. We are actually in. This might be the opportunity of the week, I think. I'm a bit moving with my chair, but here might be the opportunity of the week in dollar CAD. Okay. If you know, guys, there is like a negative correlation between oil and the dollar CAD. Oil already get down from 120 to 103, 104 dollars per barrel. I believe that we will maybe hold the $100 threshold on oil. Okay, so we'll have a short movement up in oil. This will bring us a small retracement, or maybe a huge retracement on the dollar CAD. So that's what I expect. Okay, we're gonna get down in the dollar CAD for that week. And you see on the H4 we have actually at the top, this is an extreme zone. There is all my indicators here to lead me to make a trade here. So yeah, this is quite interesting. Okay, let's maybe okay. Okay, we're gonna hold this trade, okay, for that week. Opening very small outside. This is a swing trade that we want to take here. We put the stop loss above the top. Okay, and the TP at let's say I want to take some partial profit here, and at the bottom we take the whole. I would put my TP here, and of course I will manage the trades during that week. Of course, if the market moved up a little bit more, let's say the market make another retest, let's say to that point here at the top, okay, I would also reinforce and build my position. So dollar CAD here is one of a good spot for me to do anything. Yeah, we have good spot here to to react. All right. Yeah, Aussie Yen and dollar Yen, and we're going to finish with that. But yes, I will keep telling what I'm explaining on the dollar Yen from last week. But when the market already had a huge movement up like that, you don't want to be the last guy coming at the party. Okay, you don't want, especially myself, I don't want to make a buy here. Okay, it's like I also explained that let's say comparison. It's like buying Bitcoin at 60,000. Okay, you see the market. Of course, Forex market is different. Of course, the yen is different. It's like a more it's a fundamental asset. We can have like a new movement on the upside, but technically, like the market already made the movement. I don't know if you're looking for like long term or short term, but even the two, I will not risk myself to to go and buy the dollar, and especially at that spot. Okay, when you have an H4 chart here, when you have you see we had last week here a channel, for example, the market make a retest, move down here, so all the people that went long here, okay, get blocked because they already buy the dollar yen. Okay, the dollar yen moved back again here, but we are, you know, especially at the top of last week. And talking about risk reward, if you open a sell here, okay, and you put the stop loss above the high, you have plenty, the risk reward will be huge for you, okay. Of course we can like having like 100, 200, 300 pips a movement up, but it will be very difficult to catch it, okay. And already people that wait here last week for this type of movement get it by the stop loss, okay. But yes, the yen is very weak, the dollar is strong. If you attend the beginning of the session, I explained that the dollar might be giving some retracement in the short term. So at least, of course, this also gives me, you know, a new approach for the dollar yen, that I expect it, you know, to not going even more on the upside, because I expect the dollar to you know, to retrace a little bit for that weekend and in the short term. So yes, of course, if the market goes back, or I don't know, maybe to here, you will have some buy opportunity to have. Yeah, if the market goes down to here, for example, you will have some buying opportunity. But especially at the moment, at the place the market is, there is nothing to make along. Again, this is my point of view. Okay, psychology works for me as to not being the last guy and not being in the FOMO, and I've been working it a lot of time. But here, even fundamentally, the dollar yen gives you to buy. The place to buy is not at the right place. So yeah, that's my explanation for the dollar yen. Let's finish with the Aussie yen. Yeah, and interesting. This is like, you know, classic reaction here. On the H1, the market is still close, so but you see it's making a new high. Yeah, you have to be careful on the Aussie yen if you open a sell, for example, as the market, you know, is an ascending point. Yeah. Actually, you can do both. Okay, actually here you can do both. You can buy when the market goes down to I don't know, maybe to that spot. This will be the beginning of the demand. You have the middle demand here, so there is another point to make a buy and selling at the top, or you can decide to sell at the top. Depends what you want to do, and depends where you are in the market. Okay, but yeah, I won't buy here and I won't sell in the option channel. So try to play between the range. That's how it can work for you. And if I go to the H4 chart, maybe we can have yeah, on the H4 chart, this is the action point. Okay, so actually you are at the top. Okay guys, I think we talked about a lot of different things. I hope it helps. Again, all what we discussed today, it's from my point of view, so you might have different opinion, but I like to share what I think, and I also like to discuss with some of traders that are on the chat. So again, thank you for being with me during that session. I hope we understand a little bit the context during the next week and what we should do. So guys, I appreciate doing this trading room for you during this holiday. Okay, the markets are very quiet, so we have plenty of time to still to keep learning and keep analyze a lot of scenario for the coming week. So guys, thank you for being with me. Appreciate your time. Have a nice day, have a nice week, and goodbye.